Hey everybody, JC Parets here, founder of Trend Labs, and I am thrilled to be here with my friend Herb Greenberg to talk about all the scams and the stocks that are blowing up in the market. Mr. Herb Greenberg, thank you for being here.
JC, thrilled to be here with you.
Listen, guys, if you're out there listening, be like, why am I sitting here talking to JC Parets, known for technical analysis and behavior of financial markets, and sitting here talking with legendary. My friends, you are in the presence of a Wall Street legend, and he's
Oh, please.
Like, oh,
please.
JC, I don't know about all that. Guys, Wall Street legend, Herb Greenberg, longtime journalist. I mean, this guy is in the know in places I simply am not. And, if you're wondering, what does one have to do with the other? My friends, Herb Greenberg and the work that he does is so different than what I do every day. You guys are sitting there laughing with me. It could not be more different. But that's why I appreciate it so much. It is so complementary to the things that I'm already doing. Herb's going to bring me ideas and red flags that I wouldn't be finding otherwise. And instead of just going into a chart or a particular opportunity completely unbiased, kind of just down for the get down and looking for the trend, now I can approach some of these with a more defensive posture, a more bearish look when I get these. And that is really valuable to me selfishly. And I hope that that comes across, and you guys are going to see right away. Herb, let's give the people what they want. Let's dive right in. These things are blowing up. These are scams that are right in front of us. You've been talking about them. You nailed it. These things are going from $9 to 8 cents in a matter of days and weeks. What's going on?
So we have this evolution over many months now, and it's probably been going on even longer than that, of this, what I call it, a WhatsApp stock scam. And why I say WhatsApp is because you might be, whether you're on Facebook or Instagram or maybe even TikTok, and you're actually TikTok, and you'll see some come on from somebody who looks famous, some celebrity investor. It could be whether it's a Bill Ackman or Jim Cramer. I'm concerned one day it'll be me because I've been so harsh on these things. Anyway,
you said it was going to be me too, guys. Herb thinks that I'm going to be the next fake AI. They're going to get me too.
Hey, if they're smart, they probably will, because what will happen is it will be an AI impersonation of you, looking like you're talking, because you can do that today. And that AI impersonation will say, hey, come on in. I have this new investment club. Or it'll just be an ad, and we'll say, come on in. I have this investment club. I want to invite you personally in so I can teach you about investing, and I can teach you what to do so you can make more money. And then you'll be interested because you might not know that much about stocks. You might be new to the market, or even there are people who know the market that get suckered in. And they'll come in and they'll just sort of join this WhatsApp group, and the group will have actually real pictures of real money, real financial planners, often real financial planners. This is David Costin from Goldman Sachs. But once you're in the group, he's inviting you in. Once you are in the group, you're now going to actually see financial planners from real financial planning firms who are the administrators of these groups with their pictures. There's just one catch. They have no idea their pictures are being used. Their firm is, if their firm is there, the URL that might be given will be maybe one letter off or something like that. So they're trying to create the illusion that this is real and credible. They'll bring you in, they'll start talking about how to make money, they'll give you a stock or two in this kind of market that appears to be going up, and they'll just convince you to buy some of this stock, tell you when to sell it so you've made your 2 or 3 or 5 or 10%, so you get credibility. And then they'll get you into another stock, one like Austin Technology, which is a broken stock, like many of these. It's a Chinese IPO. It's been a Chinese-based company. It's been trading in the US for quite a bit. The stock ends up going down. You don't think about that because you don't know about that. But what they do is they get enough people in there with huge volume, these things, 13 million shares, that kind of thing, to push it up, 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 up. And then, boom, before you know it, there's the rug pull. And when that rug pull comes, as you can see, within hours, the thing can go. In this case, it went from 9 to just below $1 within a few hours. It's now trading at 8 cents. There's one yesterday that there was the rug pull, and boom, it went from $30 down to, I don't know where it's trading now, $1 or so, and it'll probably go down to nothing. And so they'll get you in, and then here's the gall of these guys. The gall is they will say, they'll tell you, oh, don't worry, because they have insider information. They're pulling you in by saying this company is going to be acquired by that company, and we know it because we are part of this insider group, and you don't know that that's illegal, because if they're ever talking about insider information just on the surface, that's just illegal. And so they don't really know about these takeovers because there are no takeovers. Anyway, they pull you in, but then when you've lost the money, they'll say, hey, we want to help you make it back. Let me tell you something. I have heard from folks from around the world on this in a very short order. I'm still getting them. Got one this morning. These are people who've lost, they've lost 8,000. Many have lost 20, 50, 60. Their life savings, 100,000. I've had several 100,000. People lost several $100,000 because they really believed in it and they didn't know what they were doing. Obviously, they were, on one hand, they were greedy, they were gullible, but so is everybody else in the markets.
So hold on, Herb,
yeah.
Because one of the things that you said to me that this was somebody messaged you that worked in cybersecurity and got scammed in this and lost a ton of money. So these are really intelligent people getting scammed. So guys, if you're out there listening, let me just rewind with what just happened here. You've got these fake ads, right, that are, convincing people that they're going to help them make money in the stock market. And they actually do help them make a little bit of money and then convince them that this is the next one. And that's when you get the rug pull. That's the pump, the proverbial pump and dump that you hear all the time. And it's not just one company. Herb mentioned another one yesterday. Here's another one. This company went from above $40 to under $4 overnight. And how was this any different? Or was it the exact same thing?
Exact same thing. In fact, this happened the day I happened to mention it, the day before it fell. So, you start getting, folks focused on this. And if somebody like me mentions it, perhaps that creates the rug pull. But I think what you're seeing is, look, this is a situation where I know the FBI has looked at it, but there's a greater issue here. And that is, you say, well, how can this go on? Well, there was actually one of these companies, the symbol CLEU, got the FBI involved. The FBI actually did retrieve some money somehow. I'm not quite sure how they did it, but they were going after actually individuals, and the individuals were in Malaysia. And that was something the Wall Street Journal mentioned. They had an interesting piece on this going back even before I wrote my pieces. So it keeps going. And what it is it's a whack-a-mole scam because it is worldwide. You're just constantly whack-a-moling. Someone from Israel writes me and says, what can you do? Well, there's there are some groups that are springing up there's one on Discord for people who invested in Austin, say, and there are groups of people who are trying to figure out what they can do. There's class action lawsuits. There's a class action lawsuit that was filed recently against Facebook for allowing this to happen. I think it was against Facebook. The NASDAQ is obviously enabling these things because it's not the companies will go public and they'll say, hey, we're on the NASDAQ. No. They're on the NASDAQ CM. It's called NASDAQ Capital Markets. There are various tiers to the NASDAQ and even the New York Stock Exchange because they're so eager to get listings. I call it the come one, come all part of the NASDAQ or the New York Stock Exchange, where it's like the Vancouver Stock Exchange, where they would let me list myself as a stock probably just
they even call it a venture exchange. They got that over out there. All right, so guys, you're listening out there and you're seeing what's going on. And you're seeing these scams blowing up. I mean, literally, look at these stocks literally blowing up overnight. These are the names that Herb was talking about and several others, as he mentioned, CLEU, CIGL, ENGS. These things are happening. So, the lesson is that these are real life scams, right? They could have been avoided, right? Herb's red flags is definitely highlighting that. This is what Herb does. So I'm really interested in finding the next one of these, but here's the big thing. Not all of these companies are scams. They could literally just be companies that have, big headwinds, right? So while these scams are happening, and it's a great time to be talking about these types of stocks because there's going to be more, they don't necessarily have to be going to prison. They don't have to be breaking laws, which I find really, really interesting because it kind of opens it up to not just scam artists, but just bad companies and bad governance. But they can still pollute your portfolio if you own it and maybe take it the other step further like I do, looking to short them. So what are we going to talk about today? We are in the presence of greatness. We are here today with Mr. Herb Greenberg, a legend in his own right. And I don't just throw that around, Herb.
Legend in my
You know who
mind.
my friends are. You know. I got, I got some higher ups in my Rolodex, but so I don't throw that lightly. But the true story, fact only, Herb Greenberg, absolute legend. Ask around if you don't know him, but chances are you probably already do, because many people do know you. So we're going to talk about Herb's red flags and how he finds them. That I'm fascinated by, because I'll be the first to tell you I don't know where to find financial statements or SEC documents. I'm sure they exist. I know that I have friends that look at those things. I just wouldn't even know where to find it. So I'm very much looking forward to that. We've got some examples of some red flags of some familiar names. Lululemon. Boy, did that work out well. We're going to look at some case studies, and then your latest call. Very, very curious to see what is on your radar now. I already got a little bit of a heads up. I like it, Herb. I'm with you on this one. So, Herb, there's maybe 5 people out there listening today. And guys, if you're one of those 5 people, pay attention. You're going to want to hear this. Herb's been around for a minute. Herb was a legend before I even got in the business, right? So, Herb, tell them a little bit about you. What's the story here? Why should we be listening to you?
Well, because I've been doing this right now when it comes to flying the red flags. There are plenty of people over my career who've done it, but many are no longer doing it. And I continue to do it because it's what I do. It's what I love. I like writing about companies. I've done long biased work, but I've done short biased work. I've done short biased work with 2 of my own institutional short bias research firms I co-founded with others that had others with other levels of expertise. So what I did is, it's just, I've tried going the long bias route. I like longs, but in the end, I'm like pulled back in because it's kind of in my DNA to sort of cite risk. I'm just that type of a person. It's not that I'm glass half full, but I can see the first question I'm always going to ask, even when I'm buying a stock for myself, is what is the risk? What are my risks? And that gets lost in the translation. I believe there's nothing more you can do that's more important than first asking the question, what's the risk? Respect the risk. You'll hear me say that over and over again as you follow me. And I think you should understand that, in this world, especially now, especially in this stock market we are in right now, these are the kind of markets where people just say, hey, it's going up, I don't care. But you know what? If and when they fall, and they do fall, people go, oh, I should have known better. What's the risk? So most of the companies I deal with, you have to understand, they're not scams. These are one-offs. I have a great network, and someone in my network happened to mention those scams, and I took a look because it was just too juicy, too good for me to pass up. It was kind of fun to work on. But most of mine are real companies. And, you're constantly evolving what you do, how you do it. I am, at least. And they're companies where there's something off, and someone is talking to me about this. So somebody is basically in my network. I find ideas different ways. I have quant screens I look at. I have a way of looking every month. A certain quant screen comes, and I look at it, and I look to see whether companies are on 3 of several screens they have. And I go, oh, that's the trifecta. That's an interesting one. But I think that much of what I find is companies that I find from my network. People are talking to me all the time, and I'm looking for good ideas. And great ones often pass me by because I'm just too busy, because I have to do the work. I have to do levels of work to understand and decide whether this is something I am interested in. And so through all of these years and meeting so many people who know things and interviewing some of the, I would say, so really some of the greatest investors through my career, I think I've honed my instincts to a point where I can see something and at least identify, is this a company where, because of the risks, it is likely to lag the market? Now, let me make something very clear here, because different people look at different things. Some people want stocks that are going to outperform the market. People who short stocks are looking for short alpha. There are all sorts of things, meaning stocks that are not performing as well as the market. There are all sorts of things that go on. But what I'm trying to find is, I'm trying to find something where there's a great story, something I get excited about once I've done my work, and then I can tell that story, because I think I tell the story as well as, if not better than most, I think
you nailed it right there. And folks, I want you to hear what he just said, because this is really, really important. Herb's developed these skills over decades, becoming a legendary journalist in the business of finance. And now he's one of us. He's one of us now. Like he wasn't before, And now he's on our side. So while he has, learned all these things, being on CNBC for so many years and being a journalist from the beginning, from Miami, by the way, shout out to the 305, Herb Greenberg has developed these skills, and now we brought him over to the dark side. Now he's one of us looking to make money, not just tell the story, but looking at it from the mindset of an investor. So Herb, I just want to say thank you. You have made the right choice, and you're making a lot of us very happy to have you on our side. So we can make money off this.
I want to just say something. It's not the dark side, and I haven't made any changes in what I do. I still operate with the journalism tenets that I was raised with and that I still believe in, that help me do my research and try to decide what I do. But I will say that in the business of what I do, I have to get paid, because I don't do this for free, because I think it's really too valuable what I do. But I love to be around investors. I love to be around traders, and I love to be able to point out an issue where something does have a problem. And while I hate to see people lose money off of something I've written, you're trying to warn them. And I should also point out, I'll say it right here, I know everything I write about doesn't go the way I think it will go. And in this market, I will say, in this market right now, because of narratives, because of certain things you could never expect, some stocks will take on lives of their own. I'll say the past few months of trying to fly red flags has been one of the most difficult. And if I get some that are flat or that are down a bit, I consider that a win. But again, this is over the long term. Some of these companies that I have on this list, I started this list in May of 2023. I keep it going, even if I don't follow all these companies, but I keep them there so my subscribers can get see that I'm transparent about what I had on that list.
Well, why don't we talk about why though? Let's talk about why. So you have all of your connections, and you have all of the ways that you can approach the market. Why the red flags, right? You talk about Warren Buffett all the time, which I can appreciate, but why? Why this route?
Because everyone else it's why I got into this in the first place, when I started speaking more to short sellers than longs after years of talking just to long. Everybody wants to know what's going to go up. Everybody wants to write about what's going to go up. Go and look, newsletters. There's so many about longs. Very few people are flying the red flags, either institutionally or doing it the way I'm doing it, where they're trying to pick out issues and flag those issues. Yet this is a market. It is a stock market. It is a market that's made of longs. It's the market made of shorts, bulls and bears. That's the nature of the beast. You can't have a market with just one side of that. And there are people, the short sellers in theory are folks who are still the cops on the beat, probably more than ever, trying to point things out. Won't always be right. The stock market can do what it's going to do. The evolution of the structures of the market will make it very difficult sometimes. But I do it because I keep saying it's in my DNA. I feel there's a professional and an ethical and a moral obligation to point out what the risk is. Because like I say, I feel it, I kind of know it, and when I get it right, I get it spectacularly right. And when I talk to my sources, the different people in my network, let's say you come to me and you as a subscriber say, hey, have you looked at this? Because some subscribers, I get ideas from all sorts of places. Subscriber comes to me, I'm going to grill them before I get going, just to see if I'm interested in it. If I have one of the people I've talked to for a long time, I will start asking more questions. And then when I go through and do my work, and I go through the actual process of doing what I need to do to decide if this is something I want to write about, the number of questions I'll be asking to try to trip them up, most people will say it's more than they would expect.
Well, why don't we talk about that process? Nice little segue there, Mr. Famous journalist over here. And I see what you did there. Why don't we get into the process? Because one thing that I like about you, Herb, how dynamic you are, you don't have like a traditional process. I talked to Steve Straza. It's very simple. He's got the trades, he's got the scans, looking for compressed volatility, puts on a very specific options trade. It's very systematic, boom, boom, boom. You, as far as your processes goes, you you're very open-minded to how this goes. So it's more of like a common denominator of things, right? Why don't you talk about your instincts? Because I'm fascinated by this. And folks, sometimes you might hear people say, you got to be data-driven. You can't trust your instincts. And while being data-driven, and Herb certainly is, and we are in our own ways, of course, I talk to behavioral finance PhDs and psychologists, and actually, particularly with experience, you actually should trust your instincts. Actually, that's something that's real, and that's something that comes with time, and that develops, and it also compounds. So I've thought about this a lot. I've talked to a lot of smart people, and Herb, for me, and guys, listen to this, because this is kind of like a big question mark in the trading community, and I have certainly done my homework. And Herb's coming out here from a completely different perspective right off the bat, talking about instincts. Tell me more, Herb.
I think, and no matter what you're doing, including what you do or what other people, if you're just a technician, in the end, it all comes down to instincts. And when you're choosing ideas,
I like how you say just a technician. You hear that, guys? You hear that? I see that.
Somebody has to bring you, someone has to bring you down. So the reality is that whatever you're doing, the beauty of aging is that you hone your instincts. And just as long as you realize that you'll never fully get it, because just when you are so confident, you understand it, I always joke, boom, you're going to get, just whacked. And so you hone your instincts, though, to the point where you can say, okay, this is interesting, and you trust your instincts. Learning to trust your instincts is important. You will never always get it right. Nobody always gets it right. Instincts will be misleading for any number of reasons, including just the duration or the timing of what you decided to do. That's just the reality of the world and the markets.
Yeah, the instincts are very complementary, Herb, right?
Well, what do you mean? They're complementary which way?
They're complementary to all the work, all the additional work that you're doing. You have to put yourself in a position to potentially trust your instinct.
When I'm doing my process, so I say I don't have a process because institutionally, when you go sell institutional research, people say, what's your process? First question out of their mouths. It's like a rote question. Well, guess what? Every company is different and every situation is different. And I always just when somebody says, what's your process? I go, I just do what I do. I just do it. And each company is different. And the way I approach each company is very different. So
but you're looking at a combination, correct me if I'm wrong, Herb, you're looking at a combination of your own network and your own quantitative models that make things stand out, right? And we'll get more into the research process in a minute, but it's a combination of those things where then your instincts come into play, no?
Yeah, of course, because the network, even within the network, there are people within the network that I've talked to for many, many years. And there are certain people who, if they say, hey, Herb, have a second, I'll go, sure. And I'll listen closely and I'll listen to them. I'll almost stop everything because their picks and ideas are often better than maybe someone else's. That said, that someone else's, that you listen to everybody. But you're looking for something. I'm looking for something where I can actually enjoy telling it. There's something over here called the too hard pile. It may be a great idea in terms of warning people about, but for doing the work, I got better things to do. It's just not fun because I'm not wired that way to get into that kind of
company. That brings me to your number 3, which is your nose. And this comes from your journalism work, right? You learn how to do all this stuff and stick your nose into places from your prior experiences before you were one of us, right? Aren't those skills?
I'm not one of you. Look, the nose, one of you. Every time, the nose is literally where you're working on something, and the more work you do, because part of my process, a big part of it is the writing. And the writing, it's not just because, I'm having fun writing. It's part of my discovery is during the writing, because during the writing process, I'm understanding more about the company. It's how I learn, and I'm going back and I'm shaving back during that process, going back and double checking things, or I'm learning new things, or I'm asking myself questions. So I'm going back to the filings. I'm going through the transcripts, and I'll go this aha, and that nose is aha. You see it and you say, hey, wait a second, there's no presentation. Or you're looking at presentations and you say, wait a minute, where's the Q1 presentation? But they didn't have a Q1 presentation, but they've had presentations for the past, forever. So you say, what's changed here? And those are the things where your nose, you almost get the aha moment and you say, this one's really interesting. Now, Again, that's assuming they're not so way out here that they can pull whatever levers and tricks to still keep the game going.
No, I love that, Herb. And that truly does resonate with me. Especially because of your ability to do that and be able to pivot to whether it's a retailer or a multi-level marketing company or rare earth metals or whatever it is. Because, when I look at, your track record, which is very outstanding. I mean, you have called some big losers out there. iRobot. Look at when you red flagged it. Almost if you were a technical analyst. As it was breaking down, Herb throws out the red flag. I see what you did there, Herb. Nice little breakdown there from former resistance, right? I see that.
But you know what? It's interesting here, and this is an important lesson. It's something that many people get tripped up by. The stock already tumbled. Look how much iRobot, a well-known name, look how far it tumbled in a short amount of time. And people want to say, oh, it's already lost to, a stock can go, the decline from 10 to 1, it's like 100 to 50 may look bigger, but that's a greater decline. Stocks can continue to go down, valuations can continue to compress. Analysts, who, if indeed they're analysts following the company, can then be forced to re-rate, as the case may be, meaning just give it a different valuation. So
this stock was already down. Think about it. This stock was already down 60% or more. And then Herb put out the red flag. And from there, it was in the mid 30s and lost another 90%, right? So it doesn't have to be like this, top calling situation. This thing was already rolling over and it was just getting going. SolarEdge too. SolarEdge was already, down from its highs. And again, Herb, I know you're not a technician, but as a technician, I see this. I'm like, man, Herb nailed that one. But but again, same thing. This one thing was already down 60%. Then you red flagged it and then it fell another 90 from there.
Yeah, and it's come back a little bit and probably going to fall a lot more because the mechanics of the business. In that case of SolarEdge, which I also wrote alongside with Enphase, I actually called it
similar
Solar
situation,
Storm.
right?
Similar but different because the companies were different. One, SolarEdge sold most of its products in Europe at that time, but Europe was just there was a glut of inventory. And so that really became an issue for them. There was an influx of Chinese competition in Europe. In this country, Enphase, at that point, was mostly focused in this country, was having an enormous change because of what was going on in California and the solar rules in California. And then since then, when you look at further declines, now you have even something else, which I've talked about in my reports, and that is because of the way solar and the lack of solar credits anymore, that's going away. Solar batteries are really important. Enphase plays pretty aggressively in that space. SolarEdge is trying to be there, but Tesla's kind of the spoiler here. It's not a big deal for Tesla, but they've come out with actually probably the most inexpensive battery in the market, and they are an easy install for installers. So this is the kind of thing no one's really paying attention to, but they're coming in and they're kind of a spoiler for both these companies. Both these companies, by the way, which did phenomenally well building their businesses as solar was really on its uptrend because of their technologies. And now you have we're in the backside of that.
It's interesting. You said you started off with the scams, right? We got to talk about those scams. How can you not? Like, what a story that is. Wow. You nailed it. These things got destroyed, but not everything needs to be a scam. These are legitimate companies that are doing well. So
I got to say one thing. Can you go back to that slide?
Yeah.
There's something very interesting here. If you look at that green line that's up there right now, the one where it went higher automatically all the way on the right hand side, just recently. It's very interesting because I've written about this because Enphase didn't go up much. The only reason SolarEdge went up more was because it had more short interest. Isn't that fascinating? So it got squeezed. Enphase didn't, and they've since all come, tumbling down. It's like I say, live by the squeeze, die by the squeeze.
Yeah, the short sellers overstayed their welcome after that, but there was plenty of time to cover.
They'll have their day again. They'll have their day again.
All right, so this is really where I'm most interested in selfishly. And guys, if you're like me and you like taking notes, this is where the note taking kind of comes in. I mean, Hertz drops plenty of gems already, some great classics, and there's a couple coming right up. But three things that stand out from Herb's system to me. Definitely some structural headwinds in the company, whether it's a scam or others. I'm very curious about that. learning more about Herb's network and that process, as well as, in order for there to be a red flag, Herb's got to really be able to wrap his head around it. And I appreciate how, humble you are, and you're going to tell some examples on, some of the areas that, you've stayed away from, because it's just, it's just too much. It's not really worth it to dive in. So that's what we're going to talk about in Herb's system. Let's start with number one, Herb. When you talk about structural headwinds in a company, and I'm super stoked to talk about what you're seeing now in the market. But generally speaking, big structural headwinds. When you talk about management issues, governance issues, cap table issues, what are all these things? What does that mean?
Well, management issues are, well, first of all, let's just say structural can be a number of things, and you'll often see it in various aspects of the numbers, unless, of course, you're just starting seeing cracks, which are showing up in the balance sheet or someplace like that. But when you see the decline, the deceleration of growth, you have it up there, different. It can be any number of metrics depending upon the company. Sometimes it's a company that said it's gonna grow internationally, and the international, you can just, all you do is look at the numbers and you go, wait a minute, what are they talking about here? So you're trying to find something where a company is trying to exaggerate its performance, even though the underpinnings of the business are structurally sort of getting challenged. And they may be able to keep that going for several quarters or even longer, but the risk is now right there. Management can be a very different type of a situation, because management could be, there can be false positive, false negatives. It's among the things you're looking at. Governance is governance is a black box. Some people say, oh, look at the governance issues. And I'll say, who cares about governance anymore? Things people cared about 20 years ago, even specific accounting issues that could cause a stock to fall.
What does that mean,
are just
governance?
All pieces of
what
the
does that
puzzle
mean,
at this
Herb?
point.
For the folks at home wondering, what does governance mean?
Governance is just how a company runs itself internally. It has to do with how management pays itself, how management conducts itself, what management is willing to disclose, what the related parties are. Lots of companies have related parties. They used to be a big deal, but now it's, tell me about those related parties. I just wrote about a company called G3 Apparel, and one of my big red flags in G3 is, and this is a company that licenses brands, has its own brands like Donna Karan, DKNY. They had a big deal with PVH, which was Calvin Klein and Tommy Hilfiger, brands you all know. Well, they lost that PVH contract. That's half their revenue. And there was an interesting governance issue right there that I wrote about, where the company basically, there are these filings. People say, oh, I look at SEC filings, where there are this correspondence the SEC has with companies. You have to really look for those. And those correspondence, it wasn't until there that the company explained that G3 explained that there's a related party it has where it is controlling influence, even though it does not control what would historically be called enough of the company. It doesn't have a big enough stake to control. And it wasn't until the SEC came in 3 times, I think it was, and the company finally said, okay, we're also on the board of directors of this company, and we're also on the audit committee. And the importance here is this is a customer. So the company now controls one of its customers, and it didn't want to tell its investors. For some reason, it didn't want to let them know exactly that. And to someone like me, I say, okay, this is a company with a great history, but it's got a family ownership, which may or may not be a good thing. They can cut both ways. What else aren't they telling us? Now that they've lost PVH, they're telling us they have it under control. But is it possible, just possible, that they don't? And the only way they have it is in their hopes. Lots of companies try to get from here to there. In the hope that they get from here to there, they can sort of massage it and paper it over with this other related party. And they just didn't want you to know how significant that related party was to them for whatever reason.
Yeah, no, that's interesting. It's another, I mean, in that case, it could potentially be fraud. I mean, who even knows? I mean,
no, don't use the F word. I think the F word is an overused word, and I'm so careful about that. It doesn't have to be. It's just, you're covering up a risk that could cause things to decelerate further, or not, the company might not get where it wants to go as fast as it wants if it ever gets there.
I like this big, you always get excited when you talk about never hanging your investment thesis on courts, Congress, or any regulatory body, right?
What I always say is, I say, I don't put it that way. I say if your investment thesis hangs on courts, Congress, or any regulatory body, good luck. It doesn't matter if you're long or if you're short. And I've seen it over the years. I've experienced it. I can take you all the way back to 2000 when I was doing biotechs and writing about those companies. And that was the early days of biotech. And that was where everyone said, oh, don't worry. Phase 3. I know a doctor who. And it was always phase 3. And then you learn nobody knew nothing, and you're waiting for the FDA, which you couldn't predict what they would ever do. And come phase 3, guess what? The company didn't make it. You can see the same where people say, "Oh, there's a new law coming out, and it's going to come." You don't know until it's like any contract, right? Until the paper is signed, you got no deal. So it's the same thing here, and I just see that one because I hear people talking to me all the time. And by the way, these could be the very reason. They could be central to the thesis and they could make the difference. It's just that to me, it doesn't give me a hook. There's no edge. There's nothing you can really point to but an amorphous thing out there that may or may not matter.
Herb, you mentioned your network before. I know you well, and I know you take some phone calls while you're walking. You take certain phone calls in your computer so you can take notes. You take certain phone calls in your car on the way to the doctor, like you tell me. Sometimes you drop everything if the phone's ringing and it's a certain person. Who are these people?
They're people that I've known for many, many, many years because when you develop the network, these are many of them are fund managers. They actually run funds. Some of them are analysts who work at funds. Some of them used to be analysts that work at funds. Some of the people who used to do one or the other, but now they manage their own money, which I really love because people who manage their own money don't have to worry about other people's money. So they can, in effect, they can stay with something much longer, especially on the short side. So they don't have to, they're doing their own research. This is their money at stake. And there's nothing better than somebody who has their money at stake.
Yeah.
And that is where they're really on the line.
No, that makes a lot of sense. They're not just people that are writing things, they're actually putting their money, and they don't have LPs to answer to or certain households to answer to. They could do whatever they feel is best. I really, really like that a lot.
Yeah,
the network, I could tell you as somebody, with a pretty decent network, the idea flow that I get from my friends, for sure. I like how if you can't wrap your head around it, if it's just something that's going to be too hard to try to learn and understand, you stay away from that. You got to be able to wrap your head around that. Really appreciate that. Really resonates with me, Herb.
I like to have fun with what I'm doing. I spend a lot of time at this. I can't imagine doing anything else. Part of this is I just need to keep my brain fresh as I get older, and it's like constantly you're engaged in this daily puzzle of putting pieces together to a puzzle. And when you're writing and doing all sorts of things, you're just trying to keep things firing, as the case may be. I don't like to be bored. And sometimes I will always attempt to go after something I don't understand because you never know. So for example, a company I wrote about a while back before the stock tumbled, a company called Erie Indemnity. Most of you have never heard of Erie Indemnity. But what it is, it's an insurance company. It's an insurance company, and it is an insurance company. It basically manages another insurance company. It's something called an attorney in fact. When I first saw this, when I saw the word indemnity and I saw attorney in fact, I wanted to say, oh, please. Then I started digging a little deeper, and I found myself getting drawn into this story of this company that was my first piece on the company, which I paired with another company, not paired as a long short, but just paired with another company I wanted to point out, was levitated by lunacy. And it was levitated by lunacy because the fact that you hadn't heard of Erie, look at the stock, how the stock ran up. This was a stock that had one.
And you nailed it right near the top. Nailed it.
But what was happening is this was a company that was only covered by one analyst. It was moving by algos because it was giving you good earnings growth, but the earnings growth was kind of fallacious. So nobody cared. And I found it to be a fascinating story, and still do actually consider it pretty interesting. And the more you dig, there's more. There's accounting issues and questions and all sorts of things. So I actually ended up
structural headwinds, as you said before. To say the least. All right, Herb. Listen.
Yeah.
If you're out there and you're like me, you want to know where the next one is. right? I mean, I am dying to know, Herb. You know, you've been on the front lines for many, many years. I want to know what you're seeing right now. I know you just dropped a new red flag. A little hint, a little two AI losers. What does that even mean? Two AI losers.
Two AI losers. These are two companies that are pretty well known or known in their respective industries that don't want to admit it yet. They're living in denial, but that they are being impacted by artificial intelligence because, that is having impact all around. Both of these companies will tell you they're benefiting actually from AI. And you know what? They are benefiting from AI. But there's just one other thing. So are their customers. And their customers hire these companies to do certain things for them without giving away the full story. And the reality of the story is that their customers also may say, hey, we can save some money by doing it in-house. So when you have that kind of a dynamic, it could siphon off the growth. It certainly will be a big change for both of these companies, even though they don't want to, I say they don't really want to admit it. I think one of the companies sort of acknowledges that they're going to figure a few things out, but it doesn't matter. These are companies that could have that would be a major structural issue. And when you see companies like these say, hey, we've been through changes for years, we've adopted, we've been through this and we've been through that. Yes, they have, and yes, they have. But when you really look at the numbers, and by the way, in both of these companies, neither of these companies is it necessarily apparent in the headline numbers. So in talking to my network, I love my network because people show me things that I might not know. I have my skills. I know what my skills are, and my skills aren't generally what my networks are. And people point something out, especially on certain numbers, and they'll point things out on the balance sheet or areas where I wouldn't be looking for anything. I wouldn't go that deep. And then I'll go in and I'll figure it out and I'll say, oh yes, this is a crack in the foundation.
So why now though, Herb? Why now?
Huh?
Why now? You're talking about OST. It's like playing whack-a-mole. You think that this is just the beginning. There's a lot more coming.
The scams will be there forever. And those things, again, the scams are always going to be there. And for someone like me, they're interesting to write about. It's almost like a public service announcement when I did my scam pieces. I think why now in general for everybody is that what I say often is when no one wants to talk to me and no one wants to read what I write, I can't tell you when the inflection point is going to be. And I can't tell you what's going to happen.
It's a raging bull market, Herb.
That's exactly the time you need to be aware of the risks more than ever, because what usually happens is it isn't until stocks fall that people say, I got to read Herb now. That's historically in my career. People, I became a genius. I always become a genius when the markets are at their bottoms or when there's been a big decline. But at the top, the average investor doesn't want to hear it because right now, let's remember something. It's never been easier to make money in the stock market. There are people who will follow, say, what you're doing, and they're into the charts and they're reading it. They're just traders. They're active traders. That's all they want to do. And there are people who I believe, it's my belief, that are view the sports gaming aspect of trading right now more than they ever have. And there's so many variants in the market that they don't want to hear it. And what happens, though, is everyone gets a comeuppance and has this moment where they go, aha. But there are many people in these communities, I'm convinced, including people who are technical analysts who want to learn more about investing. They want to understand the risks. So I think even if you're not, look, I always say, this product is not designed for short sellers. Do short sellers get my work? Yes. Do institutional investors get my work? Quite a few, yes. Do they look at it for short ideas or maybe to take the other side of me? 100%. I'm agnostic about what they do with my work, but I do take pride in what I do. But I will say that these people who are doing this, I think are trying, whatever the reason is you're looking at this work, it's to understand, if you understand that you're learning about it, the more you read about this stuff, the more you're just understanding what the potential next minefield will be. And I don't just say that just hyperbole. It's what I believe. And I enjoy.
Herb, I'll tell you, I mean, I see it all the time. Lulu is one of those names that we found using technical analysis, using relative strength analysis and momentum. And you were right in there. Erie, you were the one who red flagged this and got it on my radar. So these are great examples of one name that, I found on my own as well, and you confirmed. And then here's another name that I would have never in my wildest dreams ever looked at if it wasn't for, you presenting these red flags. So guys, if you're out there listening and you are wondering what Herb is talking about, people getting these red flags in real time, there's an offer today through Stock Market TV where you can get the Founders Club price for Herb's red flags. And the product is very simple. It's designed to help you avoid losing money, which, getting back to what Herb was saying with Warren Buffett, is that rule number one, don't lose money. Rule number two, don't forget rule number one. So I love the fact that, you're sending these in real time, Herb. And if you guys are out there listening, wondering how to get these in real time, you can sign up right here. Just click the link below. Herb's got a great price through Stock Market TV. The original price is $9.99 for the year, $2.99 a quarter, which is a steal. But today, through Stock Market TV, you can have that for $4.99 for the year and $1.99 for the quarter. And Herb, Herb's been doing this for a while, but he is taking things to a whole nother level. And when you sign up today for $4.99 for the year or $1.99 for the quarter, this comes with, of course, a 30-day risk-free trial. So, get it for 30 days. You have nothing to risk. And, one of the things that we always like to talk about is risk management. Herb is here pounding the table about risk. This is actually a risk-free offer. So at any point within 30 days, you decide it's not for you, make sure to just give Mary an email and you will get a full refund, no questions asked. Herb, as far as what they're going to get in the product, a steady stream of stocks to avoid, and then more importantly, all of the research that comes behind it. Herb, you want to tell the folks how much time you put behind the scenes in researching these ideas?
Yeah, it varies on the company, but I'll usually spend a good amount of time on any company, and it just takes me time because the writing process is hard. When I start doing the research is hard. Unfortunately, as a result of that, I sometimes miss ideas, things that are sitting here that I want to work on, because I often say, my ideas is like planes on a runway, and some go in the penalty box, and I wish I hadn't put them in the penalty box while I'm busy working on something else. But it takes time. I'm actually thinking about revising that and letting people know more ambitiously what I'm writing, because one of mine just fell out of bed that I was about ready to do as a report, and that just drives me nuts. And I also want to point something else out. I publish. I don't publish for the sake of publishing, and I can be working on something and decide to pull it. So when we talk about a steady stream, I'm prolific as you can get, but publish when I have something I want to share, not just to meet some schedule.
No, I love that. And then in the meantime, Herb, in addition to the reports and the videos that you're going to be doing with subscribers, the weekly office hours is great only. This is for annual subscribers to Herb's Red Flags that you can get right now for the year for $4.99 for the year. That's a steal. So the weekly office hours, for any questions that you've got with Herb, presenting ideas that you've got. I mean, I know Herb does this even better than me. And then today, this is actually really special because we're talking about Herb's red flags. Today, Herb actually just dropped a green flag. There's a green flag that literally just got dropped. And I got to tell you, I love it. I'm in. I'm in. Well, so what happens? So subscribers subscribe right now. They click on the link, and that green flag, not just the two AI stocks that you've red flagged that is sitting there waiting for them in their inbox, but also a green flag, a name that you like. Can we get a hint? I won't do it. I know the name, but you want to give them a hint?
No, all I'll say is I got the idea from a guy who tends to be a short seller. He has a long short fund that is long and short, but he loves the sleaziest companies to short. He knows a short when he sees it, and he never goes on the record, certainly with his shorts. And he's a low profile guy. And on this one, we were chatting, and he said, he started talking about it, and he was getting all excited about it. And I said, boy, too bad you're not a quoted guy. He said, hey, you can quote me on this. And he also said, he thinks this is the single best long idea of his career. And when I have somebody on the record whose own money is at this, in fact, his fund is the number one, is not the number one. His fund owns the stock in size, and it's at the peak of what his fund can have. He bought it at double the price personally after spent a few $1 million on it after, and he will not sell any until his firm sells all of it. He's agreed that he's told his investors. So when I see something like that, I say, this is true passion. He admits he could be 100% wrong. But the fact is, he's put so much work into it. I feel that's the kind of thing, when I was a journalist, I'd love to write that story. Well, I love to share that with my subscribers. It's among the reports, so it's out there today.
Guys, click the link below and subscribe right away. The feedback and the testimonials that continue to come in again and again and again. Chris says, I'm relatively young PM who grew up watching you on CNBC, how does that make you feel there, Herb? Grew up watching you on CNBC. He could have been watching cartoons, but was watching Herb Greenberg throw out some red flags. You inspired me to root out bad management teams and taught me how to look for these red flags. That's Chris. Shout out to Chris. Here's Herb. Herb has gotten so many emails about OST and some of these other scams that we, started at the top of the hour with. Herb, have you ever gotten this much feedback about a story, or is this just common, when you're talking about these kind of stories?
On some of these, you get a decent amount. This may be more than usual, especially the geographical dispersion of it and how far afield it is and where these emails are coming from. It's pretty remarkable.
And listen, Herb Greenberg is in fact a legend, but there are a few people out there who don't know Herb Greenberg. This one here says, I feel embarrassed to say that I'm not familiar with your work, but I enjoyed reading this report. This is somebody, who's new to Herb Greenberg and already loving it. So, names like Erie Indemnity. I love the fact that you saw the word indemnity and that stood out. Even Lululemon, household name, no scam or fraud of any kind, just headwinds. Headwinds overall, iRobot, this thing was already down 60%. Herb red flags it, down another 90%. Same thing with Solar Edge, already down 50, 60%, falls another 90%. So, we're going to get to some questions now, but guys, click the link below, sign up for Herb's red flags, $4.99 for the year, $1.99 for the quarter. And of course, this is all risk-free. So Herb, we do have a couple of questions here. First question coming in from John. How often are these red flags sent out? Good question.
It's a great question. And I say when I have them, and I tend to do, I could do, and it varies because I do updates. I could do 12 a year. I could do 15 a year. I could do 10 a year. They just have to be something that I want to do. I'm not, and I'm actually going to be adding some new tools. And
this week you had 2 red flags and a green one. So I mean, they come in bundles.
But
here?
that's unusual. I don't ever want to overcommit. I will never overpromise what I can't do, and it's very critical to me to be upfront about that. I don't come out with so many that it's noise. I'm very cognizant of, is it noise or isn't it noise? But the other thing I do is, I'm publishing beyond the red flags. I'm publishing my free work, which also goes out, which is important because it's my thoughts on the markets and things. But when I get into these, it's a matter of time. Time is my constrainer. I have more ideas right now than I can shake a stick at. So I'm thinking about getting more aggressive with dropping the names of ideas. You say more than you can
shake a stick out? Is that what you just said?
Stick at or something. What I'm trying to do is get more aggressive with the concept of sharing. I have it, I call it the red flag radar. And the only thing that throws me is I hate to just throw something up without having done the work, but it's increasingly apparent to me, especially as this market continues to go, that I'm going to miss some really great ideas, at least sharing them with my subscribers. And it's just my own, so I want to do that. And then we're going to work out some other things where I want to have a list of some of the most dangerous stocks. I actually want to take some of the short squeeze list that JC has, at All Star Charts and Steve has. And I want to be able to take that kind of thing. And we're working on right now trying to figure this out and do some back testing where we can take that to find the most dangerous stocks. Because I do know on that short squeeze list, there's those stocks, the number of potentially dangerous stocks and stocks that have inherently big risk are important to see, and I think that would be something I'm very eager to. We're working on it right now.
If you're out there listening, I think this is important, right? Herb doesn't want to just come in and be like, oh, you're going to get extra, ideas a month or a quarter. Like, they come when they come. Sometimes they come in bundles, and sometimes
You know what I
it's a
tell
little
people?
quieter. I mean, it really just depends on what the market is doing.
If you go to my FAQs, I've been doing this a long time. If you go to my FAQs, I say I promise to publish 46 weeks out of the year because I take vacations. I have a vacation coming up. People, I have a life, okay? Um, and when life gets in the way. So I just like to be very upfront about that. But I tend to publish even when I'm on vacation. I used to do institutional research, and I was crossing the Drake Passage on a ship, and I was sitting there. I had to publish a report. So luckily, it wasn't so rough that I couldn't work, and the internet worked. So there you have it. So you never know with me.
We got a couple questions. I can answer these. When is the first red flag, and do you have green flags too? Well, the red flags are sitting there waiting for you. As soon as you subscribe, it is right there. All of the red flags having to do with the AI stuff that Herb was alluding to before, and currently a green flag. So yes, there are green flags. There are stocks. I actually know the name. I have inside information here.
It's published. You don't have insider information. It's published. It's published to our subscribers.
Can I tell you information as far as being in the know with the right people. I wasn't always in the know, Herb. I wasn't always in the know, and now these days I get some phone calls. I get some messages. I feel a little bit more in the know.
Because you're the man. Because you're the man. But there's one thing I do want to point out. I've said this earlier, and I want to make it clear to everybody who might be looking at my work. When you get there and you actually see some of the red flag alerts, and you actually see the names, just remember. These are it's a running list. I don't take them off. It's not like this is coverage. I put them on, and for better or for worse, I keep them there. There are a few very recently that got caught up in narratives where I think the facts were great, but narratives took them and gave them a life of their own for now. I'm there. It's the way it is, right? And so you can decide. I figure my subscribers will figure out whether this is a long or a short or something they just want to avoid. That's for them. And that's who I'm trying to appeal to.
No, I think that's great. And if you're listening out there and you're wondering, hey, is this for me? I could tell you as somebody who looks at a lot of charts and focuses on technical analysis, I could tell you it's definitely for me. Is it somebody who's looking for longs and shorts? I think absolutely. Is it somebody who's a long only person and is just looking for areas to avoid, like wondering where the landmines are and where areas to stay away from? That's a good fit also. If you are in the business, if you are a hedge fund manager, a portfolio manager, it's a great idea flow.
I got to stop you because that is perhaps the most significant point. When I was doing, again, I refer to the smartest folks I know. When I was doing institutional research, it was music, or even today I hear from subscribers, somebody who says, hey, Herb, if you're going to write about it, I may disagree with you, but I have to stop and now take a closer look. This is often missed in the equation. I'd have institutional investors who say, hey, Herb, we think you're wrong, but you forced us to, quote unquote, underwrite our position. And then they come out and go, oh my gosh, we decided not to buy more. I've had other people say, Herb, we think you're wrong. We've gone back now and underwritten our position, and we know you're wrong. And we're sticking with the position, and they were right. So it comes in all shapes and forms. But to many people, red flag alerts are an insurance policy. And while I may not hit a name hopefully you learn something just from the process of reading, the osmosis of reading what I write, because it will get you to think. Some of the best people tell me, Herb, no offense, but it's not your ideas that I shorted or I went long or I ignored. He says, but you gave me an idea for something else. Again, if you're a serious investor, that's what they do. This is what they tell me. So you never know where you're going to add value in my world. The goal is to add value, period. And if somebody can't avoid losing or generating enough income to cover the cost of the subscription or get the intangible of just being able to read that, they shouldn't be subscribing.
No, agreed 100%. One idea pays for itself for a lot more than a year, right? So the annual plan traditionally $9.99 for the year, $2.99 for the quarter. Today, you're able to get that for $4.99 for the year, $1.99 for the quarter, guys. Click the link below and join Herb Greenberg with his red flag alerts. I very much enjoy it. Everybody I talk to very much enjoys it. Herb, you really do great work. You truly are a professional, and we appreciate that. And those of you at home who joined us today, for today's special event where we're talking about the scams that were going on and some red flags right now. Click the link below, and we'll see you in there. Adios. Thanks, Herb.
My pleasure.